Hi, and welcome to Arizona Mortgage News Update. I'm Mike Goblet, your Arizona Mortgage Guru. Well, here it is, mid-April, and a lot has been happening this month. As I forewarned you earlier on, if you watched the last video, that the government was going to step in and is stepping in to make some changes in the mortgage industry, and as usual, they are not working out to you, the consumer's benefit. First, let me talk about FHA, change that's coming in on Monday, March 18th. And that is the cost of an FHA mortgage just got more expensive because the mortgage interest charge that is attached with an FHA mortgage is going up 25 basis points. What does that mean to you? Well, translated, that means about $20 more in cost or payment is going to be required per $100,000 of loan amount. So, and that can affect a lot of people very negatively. Now, before I move on to the next area, FHA mortgages are interesting as well. A lot of people think they're just for the subprime borrower, but they have some advantages, and let me tell you that one of them is they are assumable. So here's something to think about as you look at difference in mortgages and what to choose. How would you like to be able to be selling your house 3, 4, 5 years from now, 7 years from now, and you're in a 4.875 mortgage, pretty normal for an FHA mortgage, and be able to tell the customer it's an assumable mortgage. If they're FHA qualified, they can get a 4.875 mortgage with your house. Let me tell you, those rates are going to be very, very attractive in a few years. Now, there's some downsides that go with it, but understand there's some advantage too. The other half that's out there is that the federal government, or actually the Federal Reserve, stepped in and is addressing what they call anti-steering on how loan officers get paid. Candidly, you wouldn't think this would affect you, but it has for a number of reasons. It's actually a pretty complicated process now, but it really limits a lot of flexibility on the part of the loan officer, and in many cases will build in extra costs that can no longer be reduced or adjusted on the part of the loan officer. What I can tell you about us, however, is it really, in many cases, will give us an advantage, United Mortgage Financial Group, because of how we're structured and set up. Number one, you're going to find that that mortgage rates will now break down into two different levels of quote. One that's called borrower paid costs, or one that's called lender paid costs. And particularly on lower loan amounts, like under $150,000, many loan officers won't even be able to quote borrower paid, and that's important because that's often the lowest rate. And because of the way lender paid is going to be structured, I think you're going to find that we will have a competitive advantage as well because of how we set ourselves up with the lender. Now, I don't want to try and confuse any more in this segment, in this blog, but give me a call. I'll be happy to explain in more detail or show you how it can really work and how we might now have a significantly better rate even with the same lenders that other companies might have. So there's changes going on. Where are mortgage rates right now? Well, oddly enough, they've been holding very strong, and because of some of the things that have been happening in the world with Libya, with the European debt, and our economy, some of the ups and downs, mortgage rates are holding very close to where they have been overall. So 4.5 might be about par pricing and on a 30-year fix, so that's very good. And you could probably even, depending upon your loan amount, do a no-cost loan at about 4.875 or maybe even less. So give me a call. Let's talk more if you're interested in getting a mortgage and learn what's going on in the industry. I'm Mike Goblet, your Arizona Mortgage Guru. Call me here at United Mortgage Financial Group at 480-503-3533, and let's talk. I look forward to hearing from you. Have a great day. Bye now.